Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click on the notification bell icon so you don't miss our next live stream right here on YouTube every afternoon at 15:30 Eastern. Also, don't forget your free morning brief that's waiting for you at ssftg.com/brief. That way you can be sure that you are loaded up with all of the major levels of interest for the day and, of course, some charts to get you going on the right foot. Maybe you're looking to get filled in ahead of time with a video-based game plan every morning, every week, every month? Then take a look at the join button below the video to gain access to our SSFTG briefings. And if you want to get into the action, check out the live analysis rooms for the New York Stock Exchange Open. All right, so the topic for today is actually a user-submitted question, so shout out to Laurent. Thank you for the question. That'll pop up on the screen there. And it's kind of just going over what is the volume indicator and how do you read it? For a newbie, it can be a little bit confusing, and it's totally understandable. You know, what does it mean? It's on the bottom of basically every chart on the planet, but how do you actually use it? So when we're looking at the volume at the bottom of the screen is all executed trades. So any executed trade that happens, whether it's one contract, 100 contracts, 1,000, whatever, that is considered going into the volume, right? That is a solidified trade, if you will. Now, the way that trade reporting happens is usually instantaneous, but there are times where orders will get a little bit left behind or they have to get put in a little bit later in the day, and that can cause some weird volume spikes. But aside from those odd anomalies like that, generally speaking, all of the volume that you're seeing at the bottom is executed orders. Now, when it's going up or down, really what I like looking at it is in terms of the context of what's happening. When I'm looking at volume, I'm not necessarily just saying, oh, okay, well, the volume went up here. Well, okay, cool, right? That might mean something, but what's the context of the volume going up? First thing that you have to understand is the way that an order executes. Generally speaking, the majority of orders are on the bid or ask as limit orders, right? So you've got the bid down here, and you've got the ask up here, and typically there'll be limit orders or someone coming in to like buy the bid. It's usually still a limit order. Market orders are the only exception where they'll just be slapping whatever is next. But as far as the orders that are generally traded, when you're seeing the market jump to the upside and you see this huge influx in volume, well, realistically, there's no way that anybody would have been able to execute anything there aside from pending limit orders or stop orders, right, if they were getting stopped out of a trade. And so what I like to do with that information is give it a look in terms of context. Is the market going down and the volume's going up? Well, if we're assuming, in this case, that all of the volume below price was limit orders, or at least the majority of it was limit orders, then realistically, if the market is falling and volume is increasing, that would tell us that there's more buyers, right? Now, it doesn't necessarily mean that it's enough buyers to completely reverse it. Sure, in this case it did, but don't get caught up in that. That'll get you in trouble. But what we can use in that context is to say, okay, well, is this an area of interest? If we were coming down to this zone, if I get rid of the crosshair here, if we are coming down to this zone, what's something that could definitely be standing out? Well, first of all, we've got a massive higher low, swing low inside of there, guaranteed going to have a lot of stops underneath that. And then along with that, you have the other major swing low, and that's at the bottom. And again, guaranteed you're going to have a bunch of stops underneath that. Now, this is why this is so interesting, because you can see it already, right? If you were going to have a swing low and someone said, hey, put your stop here, right? Well, you're not going to put it right on the low. That doesn't make any sense. You're going to put it a little bit below the low. You know what? I'm not going to be the one that gets suckered. Nope, I'm going to put my stop just a little bit further, right? I'm going to be out of the way. Oh, it doesn't matter. They all get taken out, right? So what this is showing us is when we have this big move down and a huge rejection given this big wick at the bottom, and the volume is, way above everything else for a long time. Volume is way higher. Then realistically, given the rejection, given the volume, given the location, that would lead me to believe that sellers, at the very least, were turning into buyers, right? Sellers taking profit. They sold on the move down. It broke down to lows. And what better place to take profit? At the lows, inside lows, previous swings, low closes, etc. You can see them all stacked up around there. And so regardless of why there were buyers here, it doesn't necessarily have to be reversals. It could just be sellers taking profit. Either way, context comes very heavily into play in terms of how you want to kind of justify what's happening. As an example, if I'm looking for a pullback, if we were to look at the most recent move, actually, let's go back and see what kind of 5-minute action we can get going, just as an example. So right here is the stock exchange open, right? So obviously, volume at the stock exchange open is going to be incredibly high. So you expect to see that big influx in volume. And the second candle also has increasing volume. We're at the open. This is what you expect to see. Once things start calming down a little bit, though, then we can gauge it a little bit more, I guess honestly would be the best way to put it, because a lot of the volume that's getting stuffed in here in the first 5, 10, 15 minutes, that's just orders from potentially yesterday, from overnight, stop orders, buy at the open, sell at the open, all of these different orders hitting all at the same time. It's hard to really trust with full commitment, at least, any of the moves that happen in the first 15 minutes or so. And when we've got this big volume spike, then things start calming down. Okay, well, what are we seeing? We're seeing a big move down, and we did see volume increasing, right? It's the first 15 minutes or so. Not a huge deal, but as the market's driving lower, we're still seeing price, although lower than the previous, is still pretty high, right? If we look at it in the grand scheme of things, for the first candle of the day, it's really only, 10% lower? That's still quite a bit of volume. And when we go into the next candle, what did it do? It broke down into another new low. Now, this is where things get interesting, because if we draw backward a little bit, what low might be interesting here, right? This massive area where shorts got trapped. And I say shorts got trapped because this is a huge bear engulfing candle, and the bear engulfing entry is right below that itty bitty little bull bar. And they had a chance to get out at break even. And then since then, nothing, right? Miss break even. It gapped up. You can feel the pain. So when it comes back and all of a sudden we see volume creeping up again, well, it makes sense, right? We're seeing sellers taking profit and potentially maybe buyers coming in here as new longs. But either way, regardless of the reason, there's buyers coming in here. And when we see a continuation back to the upside, what happens? Volume completely drops. Now, that would make you initially think, well, crap, that's not a good thing, right? Volume is going down when the market's going up. That's not good at all. That's a fantastic thing, because remember, we're looking at volume backward. If the market is going up and the volume is going up, that would tell me that more sellers are coming in. They could be buyers taking profit as sellers. They could be new sellers. I don't care why. Seller is a seller. So seeing the market rally higher here, given the context that we just saw and the complete lack of volume, that's a great sign that if buyers are long, they're not taking profit yet. And if sellers are interested in shorting, they're not doing it yet. Otherwise, we'd see volume here. So that's giving us a really good clue that we're probably going to get some continuation to the upside. The next bull bar to the upside, if we go down a little bit lower, look at the volume, just tanked, right? Just nobody, nothing. That's a really good sign. That's a lot of strength, because that's showing that sellers aren't interested yet. Whether they're buyers taking profit or new shorts coming in, they're not coming in yet. And that means that buyers are going to keep looking. Now, the next candle is where things get a little bit interesting. We see a new high, and given the context, it made a new high, and we see the volume increased a little bit. So now we're starting to see a sign that maybe some buyers are coming out, taking some profit here. Just a few sellers kind of picking away at it, right? Nothing crazy, but just kind of going in at it a little bit. And then we get this big upthrust, big bull engulfing candle. And that big bull engulfing candle, right? What did we see? Big bullish momentum to the upside, big bullish breakout, and volume drastically increased. Well, you'd be thinking, that's awesome, right? That's a good thing. Actually, in this case, that might be a good thing if this engulfing candle continues, but seeing increasing volume on increasing prices tells us that there are sellers coming in. That might be buyers taking profit. It might be new sellers coming in. I don't know why they're coming in, but I know that they're coming in. And if we look backward a little bit here, some obvious levels right at the entry point of bar 1, right? We're right in that same zone. It's also the retest of the entry point from that peak from the day previous, right around the swing high. It's right around the first 5-minute range. Everything is all inside of this area. And looking at it from a fib standpoint, that also looks kind of like a 618. So you can sort of see sellers' reasoning, right? They're definitely wanting to at least maybe give it a shot. The problem for them is that the buyers held so aggressively down here that when the sellers came in, right, what do we see? Selling goes down. Big bear bar to the downside. Ooh, maybe the sellers take it. What do we see in the volume? Big increase in volume. Big jump to the upside. Right? So that big jump to the upside would tell us what? That would give us a clue that there are buyers coming in. Wait a minute, right? If sellers were nervous and now we're seeing buyers come in, oof, well, I wonder what the next candle's going to be. Obviously, we can see it. It was a bullish follow through. And what happened? The volume decreased a little bit. So we see that buyers are coming in on the dip. We see the wick on the bottom, which is assumably where the rest of the volume came in. And now that it starts going back up, volume decreases. So buyers are buying, but they're not getting out yet. We go to the next candle, and that candle, the volume completely tanks. It's one of the lowest, not the lowest, but one of the lowest volumes that it's had all day. And what was the market doing? Right? If we look up, it was falling. All right, well, if it's falling, nobody's buying it. That's not a good sign for buyers, right? That's not what buyers necessarily want to see. At the same time, it's also not necessarily falling or going. It's not really doing anything. It's an inside bar. So it kind of makes sense, given that it didn't go higher or lower, that the volume is a little bit low too. So it is justifiable why the volume's low here, because it didn't, I mean, yes, it's a bear bar, but it didn't go higher or lower, right? So if we look at the next candle, what do we see? Pop to the upside and a big wick off the highs and volume increasing. Buyers look like they're starting to get a little bit nervous. Maybe these buyers who bought the close of that bull bar, maybe they bought above that bear bar thinking breakout, right? Whatever the reason may be, we saw higher prices that got rejected on increasing volume. That's showing that buyers are turning into sellers or new sellers are coming in. Whatever reason, there are sellers there. But, right, this is where things get really trappy, because the very next candle, right, what happens? All of a sudden, we see this trigger underneath the bears, right? And what I'm talking about, just as a reference point, the market went underneath this bear bar that triggers in short, so we're looking to utilize stop orders underneath that candle. They get triggered in short underneath here, and it immediately jumps right back up. So keep that into context when I'm looking at this candle, because what ended up happening was we saw the volume increasing again. And you'd be thinking, well, higher prices, volume increasing. But remember the context that we were just talking about. That's the king here, is context. What did we end up having? Big short opportunity for sellers to try to come in. We saw volume increasing. Sellers failed, and we get a big bull bar attempt to the upside that still closes bullish, but it's a little bit weak. Volume wasn't crazy by any means, but we're also seeing sellers maybe getting a little bit nervous here. That's going to put them on edge. Now, the next one is a big bull bar to the upside. And if we look at the volume there, we see a big jump in volume, right? Nice, consistent. If you were to draw a trend line across it, it fits really nicely. We've got good, consistent volume increasing, showing that buyers are doing what? They're taking profit. We're seeing buyers taking profit to the upside while the market's rallying up. Sell into strength, right? Once we complete that big bull bar, we get another gigantic bull bar to the upside. And what ended up happening? Volume jumped up quite a bit too. That wasn't a small incline like the others. If you were drawing a trend line, you can see it broke above. So volume kind of popped up a little bit. And when it pops up, we also see a huge bull bar to the upside. Wait a minute. That's starting to make me think that buyers might be taking profit up here. That doesn't mean that the market's got to reverse here and go down to zero. But what that does mean is that if I want to be a buyer, maybe I don't want to do it at the top of this bull bar yet, right? I need more proof. That's really all I'm utilizing volume for, is just to kind of gauge what's happening in the context of the markets, right? In context, in combination with volume is the key ingredient that you need in utilizing volume. Using volume by itself, there's volume spread analysis, VSA stuff. I mean, there's all of that. And I mean, you can see I also have volume profiles and all of that, which is basically just volume for each price level instead of for time levels, just as a side note there. But I mean, realistically, the important part is the context in concert with the volume, right? Is it making sense as to what's going on, or does it not make sense? Does it give you a clue that something might be wrong? And you can kind of adjust your approach from there. All right, well, hopefully that answered your question, Laurent. And again, thank you for the suggestion. It's a great topic because volume can be, on the surface, it's one of those things that seems pretty straightforward, but when you start adding that little bit of salt and pepper, add that bit of spice to it with that context, ooh, man, that's when things start getting really interesting. So hopefully this kind of helped guide you in the right direction. And the big thing really is just going to be keeping an eye on it over and over and over again, seeing what's happening, relating it to the volume, and repetition, doing it over and over. Does the story that you're creating make sense? And if it doesn't, adjust the story. There's nothing wrong with having to adjust. Nobody's ever going to be right 100% of the time in the markets. And that's one of those things. You just got to adjust when the market changes. That's going to do it. Hopefully you found it useful, interesting, entertaining, maybe something you can add to your tool belt if you needed it. But that'll do it. As always, if you have any questions, feel free to shoot us an email